Hey guys, so in today's video, I'm going to be teaching you a super simple 5-minute gold scalping strategy that you can utilize in order to pass your funded account challenges and make some crazy gains. Now, the reason why this strategy is so powerful is because if you catch the trend correctly and you follow all of the steps inside of the checklist that I'm going to give you, you can actually catch trades that are going to give you some crazy, insane gains that will help you pass your funded account challenges in 1, 2, or even 3 days. So in this video, I'm going to give you a couple trade breakdowns that's going to show you exactly what you need to look for inside of these trades, along with a very nice checklist that you can follow to make sure that you are charting up A+ setups. So without further ado, let's jump straight into this video. But before we do that, make sure you hit the like, subscribe, and follow button because it goes a long way into helping this channel provide you all of this insane content. But without further ado, let's jump straight into this video. First and foremost, what we need to do is have a checklist. Now, the reason why we have a checklist is because it keeps us accountable and it makes sure that every single trade that we enter is the exact same. We're following a blueprint that works and it makes you accountable. It makes you not enter trades that don't fit the plan and willy-nilly just jumping into the markets. So first and foremost, we are going to be trading gold on the 5-minute time frame. Now, as I said, it's a scalping strategy. That means you're going to be in and out of trades very, very quickly, potentially within the same hour, or sometimes you can hold these trades for a little bit longer. We're going to be trading between the times of 8 a.m. and 10 a.m. UK time. Now, as I said, that is the UK time. Now, if you're somewhere else in the world, just configure it to wherever you are, whatever time zone you're in. We're going to be making sure that we are pro-trend. Whether that be bullish, whether that be bearish, we are only going to be taking trades with the trend. So if we're bullish, we're looking for buyers. If we're bearish, we're looking for sells. No counter trend trading. We're going to be looking for 5-minute fair value gaps as our entry that are nested within volume candles. And we're simply going to be targeting a 1-to-1 or a 1-to-2 risk to reward. Now, this example is from today itself. And I'm going to show you that I actually took this trade inside of a MetaTrader terminal. But this was this morning at 8:45 a.m. Now, this was a nice 1-to-5 risk to reward trade, but as you can see, it actually ran all the way up to a nice 1-to-3 risk to reward. Now, as you can see, I took the entry right there at 8:45 this morning and I exited right there for a nice 1,500 gain on this gold trade this morning. Let's replay the chart and break down exactly why I entered this trade. So first, we're going to identify our trading time zone. So we're trading between the times of 8 a.m. and 10 a.m. UK time. So within this window is where we are looking for our setup. Before this time, we don't worry about what's happening. After this time, we don't worry about what's happening. Now, this keeps us accountable and gives us a window to trade so we're not sat on our screens staring at the charts all day, because the last thing you want to do is change your job at 9 to 5 for a 9 to 5 on the charts. We do this so that we can become financially free. We can go and live our lives. Why do we then want to change that in for a 9 to 5 staring at the charts? We don't want to do that. So this gives us a 2-hour window within which we are looking for trades. If we don't find one, we simply walk away and come back the next day. So after all of that is done, we've identified our trading times. We're making sure that we're on gold on the 5-minute chart. We're going to identify what our structure is telling us. Are we bullish or are we bearish? Well, taking a look at this, we can see that we put in a higher high, higher low, and then we had a breaker structure right here and price put in a brand new higher high. This tells us that we are bullish, so we are only going to be looking for buying positions. So once we've identified our trend, we can then tick off that we've done this. We've identified our trading time and we are pro-trend and we are bullish in this market at the moment. So our next step is to identify a 5-minute fair value gap that is nested inside of a volume candle. Now, what does that mean? So now if I zoom into this chart, we can see right here, we've got all of this inefficiency where price only gave us buying opportunities and no selling positions. So there is a lot of inefficiency right here, coupled with a lot of volume. Price was offered buys, no sells, and we had this massive momentum push to the upside. This means volume and inefficiency go hand in hand in giving us a perfect area that price is going to be magnetized back towards, indicating that we're going to be able to take a beautiful entry right there. So now if we identify this fair value gap, which was left right here, and we actually zoom out, we can now tick off the next thing, which is to identify the 5-minute fair value gap and our volume candle. So now, as you can see, we're ticking off our checklist to make sure that we are identifying the perfect A+ setup. Now, our last thing to do is make sure that we are taking a 1-to-1 or a 1-to-2 risk to reward trade. And once we've done all of that, we can then safely enter this position. So we're going to be taking our entry at the open of that fair value gap. with our stops just below that low right there, because if it breaks below that low, that means we've invalidated this entire trend. We are bullish, but if we break below the low, we now flip bearish, and we're supposed to be putting in lower lows and lower highs. So that is where our stop loss goes, and we simply target a 121 or a 122. Now in this case, I was happy with my profits and I took profits at a 125 risk to reward. But for the example, we're actually going to put it to a nice 122 risk to reward. So that is our trade done. That is everything done. If we go ahead and check our checklist, number one, are we inside the gold chart on the 5-minute time frame? Yes. Are we trading between the times of 8 a.m. and 10 a.m. UK time? Yes. Are we pro trend? Yes, price is bullish. Have we identified a 5-minute fair value gap which has been nestled and left inside of a volume candle? Yes. So now we can tick that off. And have we now taken a trade which is a 121 or a 122 risk to reward? Yes. That means we have ticked everything off of our checklist, and now we can safely enter this position with the knowledge that every single trade is going to be a A+ setup, so long as all of these ticks are in place. So now if I play price on, we can see that price comes back down, gives us a nice sniper entry right there, and then from there price literally just rockets straight to our take profit. It is as simple as that, and the reason for this is because price is magnetized to areas where there is an inefficiency. Only buying positions were offered in this area, no selling positions. This means that price has to come back into this area to rebalance price. Sales are now offered, price has rebalanced itself, and then from there it's going to continue in its pro trend direction. It is as simple as that. We follow the checklist, we tick everything off, and then we can safely sleep with the knowledge that we have taken an A+ setup. So let's go over another example so you guys can really understand how to take these A+ setups. So here we are again on gold on the 5-minute time frame. So first things first, we're going to come over to our checklist and tick off that we are on the 5-minute time frame. Next, we're going to identify our trading time zones, and we trade between the times of 8 and 10 a.m. UK time. So we identify that with a nice vertical line so that we can be accountable that we are only going to trade within this time window. Perfect. So now that we've done that, we can then go ahead and tick that off of our checklist. Next is to identify the trend. Where are we? Are we bullish? Are we bearish? So as we can see, price has put in this higher high, then we've come down, put in a higher low, and now we've got a brand new higher high breaking this previous structure. This means we are very bullish, and with the pro trend, we are only going to be looking for buyers, no selling positions. So now that we've identified that we are bullish, price is now retraced and given us a higher low. This means our next anticipation is that we get a brand new higher high and we break this structural point right here. Once we get this higher high, we can then expect price to pull back. And when it does, we are going to identify the 5-minute fair value gap nestled inside of a volume candle, take our entry, and that is everything that we need to do. So now that we understand that, our next step is to wait for price to give us a break of structure right here so that we can confirm the bullish trend. So if I play price on, we can see that right there we get this nice break of structure to the upside. So this tells us that we are continuing with the bullish momentum. And what have we also got? Well, first of all, we've got this nice fair value gap right here, and we've also got another fair value gap just below it. So which one do we pick? Now, if somebody tells you that there is a perfect way of knowing exactly which fair value gap to enter into, they are lying, because there is no way of knowing exactly which fair value gap is going to hold. However, if you go ahead and backtest gold, what you'll realize is that gold actually likes to go all the way to the extreme. Gold likes to retrace, it doesn't like to tap and run. So once you backtest, you collect this data and you understand that with gold, it likes to retrace to the extremes. So with that knowledge, what can we now do? Well, we can actually get rid of the very first fair value gap and only take our entry on the second fair value gap. Now again, this comes with time, this comes with knowledge, this comes with backtesting where you're spending time in the market. The more time you spend in the market, the more you understand how it moves, how it behaves, and how each individual pair as a whole moves by itself. So this is why I always say that you should spend time backtesting any strategy that I give you guys before jumping live with it into the markets. So now that we've got our fair value gap, what can we now do next? Well, we can tick off that we are bullish. We've identified the 5-minute fair value gap, which is nestled inside of this volume candle. And again, as we can see, the reason why this is a fair value gap is because only buying positions were offered in this area, no sells, and we have left this massive area of inefficiency. Now, price is 9 times out of 10 going to come back, rebalance this area, and then from there we are going to rocket in the pro trend direction. So with all of that knowledge, we can now safely take our trade at the open of that fair value gap with our stops just below that low. And all we're simply going to do is target a 1-2-1. And if you want to go for more, if you feel comfortable, you can always go for more. But now that we've done that, let's go over our checklist. And what have we done? We've identified that we're on gold on the 5-minute time frame. Perfect. We're trading between the times of 8 and 10 a.m. UK time. Perfect. We are bullish and our trend is bullish, therefore we are only going to be looking for buys. Perfect. We've identified the 5-minute fair value gap that is nestled inside of this volume candle, which actually gave us the breaker structure to the upside as well. So now that we've done all of that, we've now taken our trade, we've placed it into our terminals, and we've made sure that we're either taking a 1-1 or a 1-2. Now all of the hard work is done. Now all we're simply going to do is wait for price to come back, tap us in, and either give us a stop loss or a take profit. Now in this case, we get another take profit right there, beautiful. Sniper entry, price rebalanced this area, and then from there we had a move in the pro trend direction. Now if you had held this a little longer, as you can see, sometimes price then can retrace. But as you can see, price came back, retraced, and what did it do? It came back and it closed out the inefficiency on the lower time frame, which if you dig deep and you go ahead and back test this pair, you'll see that that's exactly what happened. And then from there, price is now giving us another break of structure. We've got this brand new higher high, price then came back, gave us a higher low, retraced into our area of interest, and then from there we had another push to the upside where we got a brand new higher high. So as we can see, price is continuing in its bullish momentum and it is pushing to the upside. Now from here, as we can see, we've now left our trading window, so we can no longer look to enter any more positions. So if we've got an area of interest like this right here, are you going to take that trade? Now, as a disciplined trader, your answer should be no. I'm not going to take that trade because it is outside of my trading window. And 9 times out of 10, if I take a trade like this, then I'm not a disciplined trader. Now, I really need you guys to understand the reason why there is these trading windows is because these are the perfect times for us to follow a pro trend setup. Now, look what happens if you were to take this position. You would have been stopped out. And then you would have kicked yourself and you would have thought, oh, I'm not a good trader. Why did I do that? But in trading, it's all about being disciplined. The more disciplined you are, the more you follow your plan, the better of a trader you will become and the more money that you will extract from this market. So I hope you guys learned something new from this video and you're able to go ahead, backtest this strategy and then take it into the live markets to make a lot of money. If you did enjoy this video, then don't forget to leave a like, comment and subscribe. And if you want to see something new on the channel, then let me know down in the comment section. But on that note, I'll catch you guys in the next video.